Hi, this is Jim Cramer, founder of TheStreet.com, talking to Dan Dicker, our energy expert. We've had a huge number of quarters huge number of companies have reported. One of the things I have not liked is the commentary by people about the quarters because they're not schooled enough in what really matters. Dan, Conoco, Chevron, Exxon, Noble.
All beats. Noble is a big beat.
But when you read the commentary, you wouldn't know what the stocks were going to do versus what the quarters are. So I want you to put this in perspective. Oxy initially had been run down all the way to 79.
Right.
They report suddenly it's at 89. Nobody likes
I know
it
they're
at
after
79.
him, right?
Yeah,
It seems like the market's after him. They're waiting for the breakout of the refining assets.
Yes, so it's a breakup story.
It's a breakup story.
Conoco, it wasn't that great, but it wasn't that bad.
But Conoco, in some ways they lowered guidance on production. I think
so. Why shouldn't we sell that? It's an extraordinary, but shouldn't have that? See, what I'm trying to figure out is what triggers selling and what's triggering buying right now.
Right now, to me, it's always been about the prospects going forward. Lee Raymond had a great line. He was brought up to the Senate. I'll never forget this. Barbara Boxer, was excoriating about the latest quarter. They made whatever billions of dollars, $20 billion they made. And how do you feel about that? And he looked her straight in the eye and he said, Senator, Exxon doesn't care about what we made last quarter. We're worried about what we're going to make 3 quarters from now. Right. And that's really what all the majors are about. So when I look at them, what I look at is their production guidelines, their CapEx, where they're going to put their money over the next several quarters, and whether they're going to have a success there, whether I look at the prospects that they're looking at and whether that success makes sense. And then then you got to gauge that against the stock price.
Right.
For someone like Chevron, which has great prospects and great production increases that are coming down the line, they've already run to 122. It's not particularly a great value to me.
Why did it go? See, again, we do sophisticated video here. And when I read Chevron versus Exxon, I said, oh, Chevron's a little better than Exxon. But Chevron's
already run.
Yeah, but it didn't matter.
Is it value now? I know.
That's what I'm saying. Why didn't people say,
Gun Chevron to the head, everybody wants to pick Chevron here, and I don't. But I still think it's run too far, and I think they're going to have trouble in the Frada field in Brazil, where they have a lot of their money. I think that may be made up a little bit in what they're going to do in the Gulf of Mexico, which is going to be huge. And I also think they have a little more downstream asset that's at risk here, considering the spreads that are coming in. Again, you want to get deep in the weeds, you want to get sophisticated. Chevron's not my top of pops here. My top of pops in the majors happens to be offshore. Unfortunately, it's with Shell, which I think is doing tremendous stuff in Mozambique,
no one's looked at Shell in
LNG,
ages.
Gulf of Mexico.
/
I know, and the problem with it, of course, it is unbelievably tied into the European malaise and cannot get out of its own way.
Royal Dutch.
Therefore, instead of going for Royal Dutch, which I always hanker to buy and always lose money when I do because the European situation just weighs on it so heavily, I'm brought back again to BP. We talked about it again a couple of weeks ago.
Wasn't it?
Fantastic quarter. This is the way I figure it, Jim. You are getting a dividend, which I think is very, very safe, okay? Based upon the cash flow that they have working now. And to me, you get a free option into Mad Dog in the Gulf of Mexico, which we talked about. To me, you take that dividend, you take that free option in the Gulf of Mexico, and you look at the chart and you say, this stock is not going under 38.
No, this is the coil spring. Now,
Here's what
I want you to do. I want you to rank them about which you would buy now and which you would sell now.
BP, number 1.
To buy.
To buy. Royal Dutch Shell, I want to buy as soon as Europe shows a bottom.
Royal Dutch Shell.
I really do.
Okay.
Exxon is number 3. And
even because of long-term consideration.
Because of the stock buybacks. It's like, it's just, even they dropped their buyback from $4 billion to $3 billion. But even with that, I mean, it's the steadiest of the eddies.
Okay.
And then, you can take your pick. Chevron, I think, is a much better profile in terms of production, but I think it's run too far. And Conoco, and that's the way I would rank the majors.
Wow. Is there anyone that has wowed you and anyone who has really
Noble
disappointed you?
always wows me. But again, with these high beta plays, every time they hit oil $3 or $4, these high beta E&Ps, these independents, get murdered. And you're stuck with some bad stock at a bad price. I continue to hang in. When it goes down, I buy some more. But it's a tough play in the independents. So Again, I like the beta. I want the beta, but beta's been bad this year. I
Yeah,
mean,
it's
let's
been real
admit
bad.
it.
No,
It's
I
been
mean,
bad.
that's why I love to hear BP. I love to hear Royal Beach.
Right,
Those
right.
are, without a doubt,
Right, there's safety
companies
plays.
that
They're going to pay
have
their
good
dividends.
yield.
Exactly. And with BP particularly, I really feel like you're getting this free option in the Gulf, which right now I'm very excited about.
I think it's a great call. It's Dan Dicker. I'm Jim Cramer. Stay with us.